it will also harm you. That's why we managed it properly. Now we come to trading. When we open the chart, when we open the mobile app, we have two options. One is buying and the other is a short position. One will be coming to you in blue, one will be coming to you in red. The blue button is for buying and the red button is for selling. Now, what does buying mean? It means you are trading this currency, for example, Euro USD. You bought the currency. Who speculated that the euro will be strong against the dollar? So your expectation is that it will go up. Now what will you do? So you will press the blue button, which we call the buy button. Similarly, when you go into a short position, you go into a selling position. Now your selling position is such that if I want to sell the euro, I think the euro will weaken, so I will press the red button, which we also call short, which we also call sell. Then if you do not have any open position, then flat and square will not affect you at all. Then when you have noticed one more thing, that the asking price is the blue price and the red price, there will be a difference between the two. The difference between them, we call it the spread in the world of bid and ask. Now the broker's commission also comes from that. That is the broker's commission. There is a markup providing you leverage to bring your trades to the market, and that is the way he makes money off. On this off-topic note, you will see that all the broker-sponsored social media influencers you have, whether they are sponsored by Access, XM, IC Markets, IG, or FX Markets, there are many brokers. What will they do? They will tell you about scalping strategies. They will tell you to trade as much as possible. They will tell you to focus on shorter time frames. Why? The more you trade, the more benefit they get. They are making money from commissions. They don't care whether you are in profit or loss. Most probably, when you overtrade, trade excessively, trade without reason, you will also incur losses. Yet, the broker's commission is still earned. And when you went into loss with him, the money also went away. The broker is very happy. So now we have given an example of how to calculate the spread. You can see in the example here, as we discussed earlier, in Forex trading, we speculate whether one currency will rise or fall against another. Now, how to calculate this, how to see if a currency will rise or fall, or what factors affect a currency's rise and fall. Those factors are fundamental factors. What is a country's GDP? How is its economy doing? How are its jobs? Are people getting jobs there or not? Are the people who are working getting lower or higher salaries? What are their wages? What is their inflation rate? Is it a manufacturing industry focused country or a services industry focused country? If the focus country here, how its industry is doing, whether it is growing or not, whether its GDP is weak or strong, what its future projections are by looking at all this, what interest rate has its central bank set for it. By seeing all this, a currency rises and falls. Basically, as we know, everything in this world is driven by a very simple formula. It operates on a very simple formula that we call supply and demand. It falls on supply, it rises on demand. This is a very easy method. It runs very smoothly. Similarly, economic events and economic activity create both the supply and demand for a currency. And when we factor all of these, a currency rises and falls. Now, here's an example of these. If you have the brief that the US economy is weakening, automatically it will become strong against the dollar. So what will you do? You will buy Euro USD. Similarly, the opposite is true. If you understand that the Eurozone economy will weaken and the US economy will be strong, then you will simply go and press the sell button for Euro USD. What is a concept? There is a base currency and a quote currency. Which is the base currency? The one that comes first is called the base currency. The one that comes on the second side, on the right side, is called the quote currency. Now, in this, we have various examples. We have USD JPY. If you think Japan's export has become weak and Japan will weaken its currency to strengthen its exports, so understand one thing, the export countries that used to make their materials and sell them outside, what will their focus be? Their focus will be that our currency remains weak. If the currency remains weak, the demand for goods will be good. Similarly, if you think Japan will also weaken its currency, you will buy dollars. If you think the situation in the US is bad, people are withdrawing money from the US market, stock market, or the US market, you will sell USD JPY. Similarly, if you think the British economy will become stronger than the US economy, you will buy GBP USD. And if you think the opposite, USD GBP. For example, USD CHF. If you think USD CHF Swiss franc value over, you will buy the USD CHF because in that your base currency is USD and the quote currency is CHF. And if you think the US economy is weakening, what will you do? You will sell USD CHF, meaning there is a simple formula to understand this. Now, what do we trade in? We trade in lot size. Now, in lots, we have the most accessible accounts. We have access to 3 lots. One is of 1,000 units, one is of 10,000 units, and one is of 100,000 units, where we have a lot size of 0.01 equal to 1,000 units. 0.10 equals 10,000 units and mini lot, and 0 and 1.0 equals one standard lot, 100,000 units, and 100,000 units. We said now this is the lot size, the average. Now, as we discussed earlier, what is the average? Like you discussed, it's a big role whether it's 1,000 units or 100,000 units or a 0.1 unit. You cannot access it. If you don't have that much money in your account, then the broker comes in between. The broker gives you the average. If you are given an average of 50, meaning you can open a position of $100,000 on a $2,000 account, if it gives an average of 1 to 100, meaning you can open a lot on a $1,000 account or open a position of $100,000. Similarly, when you do that, you will get significant profit and significant loss. That's why it's always said, always manage your. Now we are understanding the basics of the forex market. Now that we have learned about trading, we have also understood buy and sell. Now, from which point does it make a difference in money, and which points do we calculate? Mostly, as you might have heard in our forex trading, we calculate pips. Now, how are pips calculated when we have 5 digits? For example, we have Euro ST, where the figure is 1.0521. Where will the pip be in that? The fifth figure will be after the zero's decimal or after the first figure's decimal, like we would say the fourth decimal point. That will be equal to 1 pip. Similarly, when we go to dollar yen is a currency pair in which we only have 4 figures. So in that figure, our second decimal point, the figure that comes after 0.01, that is our equal to 1 pip. Now, how to calculate the pip value? Now, for example, USD CAD, the current price is 1.0200. Now, how will we calculate the value?